Question number 116. B&D Company, a partnership firm in Nagpur, Maharashtra, is a wholesaler of taxable product P and an exempted product Q. The firm supplies these products only in the eastern part of Maharashtra. All the procurements, both goods and service of the firm, are from the suppliers registered under regular scheme in the state of Maharashtra. The firm pays tax under composition scheme. So therefore this firm B&D Company is opting for composition scheme, and they are making inward supplies from a person opting for regular scheme, which means they will pay GST on their inward supplies. And when they are under composition scheme, up to what turnover they can be into composition scheme? They can be into composition scheme up to 150 lakhs of aggregate turnover, and they are exempted in product P, which is a taxable product, and exempted product Q. B&D Company has furnished the following details with respect to its turnover exclusive of taxes and stock exclusive of taxes. Particulars P and Q: turnover for the quarter ended 36, turnover for the quarter ended 39. So now for the first quarter, what is the turnover for the first quarter? So for the first quarter, while taking turnover, we take both taxable and exempted. So 60 lakhs plus 17 lakh 65,000, that will be 77 lakh 65,000 will be the turnover. Then for the quarter ended 39, what will be the turnover by this quarter? That is cumulative. 77 lakh 65,000 plus 50 lakhs plus 17 lakhs, that will be, so 1 crore 44 lakh 65,000 is their turnover up to the quarter ending 30th September. Now they gave the stock details as on 30th June, 30th September and 31st October. Now the entire stock of product P and Q available with the firm as on 39 is purchased during the said half year, except a consignment of product P valuing 3 lakhs which was purchased in the April month of the preceding financial year. That is more than 1 year. In the month of October, no purchases were made and the products were sold with a profit margin of 20% on sales. Now the extract of only bill book maintained by the firm showed the details. This is the details of the bill book for the month of October. Now they gave the details of services availed by B&D. So this is details of the services availed. Freight paid to GTA during the period April to October. Assume equal amount of freight is paid each month on the 10th day of each month. So GTA service will come under RCM. Okay. Assume equal amount of freight is paid each month on the 10th day of each month. So April to October means it is for 7 months. So 1,40,000 divided by 7, 20,000 per month paid on 10th of each month. Also assume that the goods for which the freight is paid on 10th day of the month are transported between 11th and 20th day of the month. Okay. Special packing charges paid to a packing company having expertise in such specialized packing during the period January to October. The packing charges are paid for the goods which are transported between 11th to 20th day of the month. The goods are packed on 10th day and then transported from 11th day onwards. Assume equal amount of packing charges are paid each month on the 9th day of each month. All the above amounts are exclusive of taxes wherever applicable. Compute the net GST payable. The same type of question is there in input tax credit, but there what we have seen is about how much GST paid on closing stock can be taken as credit. So that part 18(1)(c). So for related to that part we have the question in input tax credit, but here the question, same question but with a different perspective. Compute the amount, that is net GST payable of B&D Company for the period April to October under composition scheme, showing calculations for each quarter separately. Make suitable assumptions wherever required. Rate of CGST and SGST on service of transportation of goods by GTA is 2.5% each. Stock is valued at cost price. Okay. So now we need to compute the net GST liability of B&D for the month of April to October under composition scheme. So first April to June quarter, April to June quarter, very simple. They are a trader, they are a wholesaler. So first quarter, whatever may be the turnover, on that 0.5% CGST, 0.5% SGST. So 77 lakh 65,000 into 0.5%, 38,825, 38,825 will be, GST liability, but they are a trader. They are a trader means trader will pay GST on what turnover? Only on taxable turnover. So what is a taxable turnover? 60 lakhs into 0.5%, 30,000 and 30,000 will be taken for the first quarter. Quarter ending 30th June. Okay. Then next one for the next quarter, second quarter, 50 lakhs. 50 lakhs into 0.5%, that is 25,000 CGST, 25,000 SGST for the next quarter. Now, in the month of October, they are crossing 150 lakhs on one date. Up to that date only they will pay GST under composition scheme. So 1 crore 44 lakh 65,000. For this, if you add 1 crore 44 lakh 65,000 plus 2 lakh 3,000, that is 1 crore 46 lakh 68,000 plus 1 lakh 38,250. So 1 crore 48 lakh 6,250 plus 1 lakh 6,250, that is 1 crore 49 lakh 12,500, and then plus 92,500. So 1 crore 50 lakh 5,000. So exactly on this date, this bill, because of this bill, we are crossing 150 lakhs, correct? Because of this bill, we are crossing 150 lakhs, which means that this bill onwards, we are not under composition scheme. So up to this bill only we will be under composition scheme. Up to this bill only we will be into composition scheme. But sir, in this 92,500 only 5,000 is under normal scheme na, because 150 lakhs we are not at crossing, let it be. But usually invoice wise we will see. Because of that invoice, one invoice, if we are crossing 150 lakhs, from that invoice onwards we will not be under composition scheme. So therefore up to this date, what is the turnover of P for October? So 2 lakhs, because still up to 2308 bill they are under composition scheme na, so then they will be required to pay tax under composition scheme and 0.5% CGST, 0.5% SGST on the taxable turnover. So 2 lakhs plus 1 lakh 36,000 plus 67,000, 4 lakh 3,000 into 0.5%. So 2015 will be taken as the composite tax liability, composition tax liability. Plus they are also into inward supplies. That is, first one, GTS services. GTS services they are receiving. With respect to GTS services, what they are receiving, so they need to pay GST under RCM. What is the time of supply? So in case of RCM, the time of supply is the date on which payment is made, or 61st day from the date of invoice, whichever is earlier. Here the payment is made on 10th day of each month. So for the first 3 months, April, May, June. So 1 lakh 40 divided by 7 is 20,000. So 20,000 into 3, 60,000. 60,000 into what is the GST rate? GTS services 5%, 2.5% CGST, 2.5% SGST. That is 1,500 will be RCM liability. So that's where we get for the quarter, total GST liability. Say next quarter also 1,500. So already 25, 1,500, 26,500. Now, for the month of October, the payment itself is made on 10th of every month, 10th October. But by 10th October, they are not into composition scheme. So it will not come under composition tax liability. So it will not come under composition tax liability. The time of supply is 10th. And by 10th, they are not under composition scheme. Up to 3rd only, they are under composition scheme. So due to that reason, this will not come under composition tax liability, that comes under normal tax liability. Okay. So which means they are asking, compute the tax payable when they are under composition scheme. So that is this net liability for the period April to October under composition scheme. This much is the liability under composition scheme. Okay. Then the total liability, if you see 31,500, 26,500 and 2015, this is the liability. So with this question is over. Sir, what about packing charges? Special packing charges, we don't have any RCM with respect to special packing charges and all. Special packing charges, whatever GST paid, that is paid only. That cannot be taken as credit. Then why we need to add it under their liability? So that GST is paid to the supplier. So supplier would have recovered it from the recipient. They don't have to pay the GST to the government. So here what is their liability? Their liability is this much only. This is not covered under RCM.